Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is Senior Investment Manager at Gower Financial Services. We're going to take a look at 2022 and what might happen in 2023. All opinions are personal and no investment advice is being given. Toby, good to see you. Happy New Year.
And to you too, Tony. Thank you.
Thank you very much. Right, let's start off with a review over the last 3 months. We always do this as the first part of the show, don't we?
Sure, yeah. Really, the case that the American markets have been flat or negative. I mean, the tech sector's just really been under the cosh still in the States. However, other markets like Japan, Europe, and the UK have had quite a good quarter, but you're still coming from a very low base. You're not going to make up the general damage of 2022, unfortunately.
No, it's interesting though, because looking at the FTSE this morning, we recorded this on Monday, the 9th of January. It's up to 7,700, the FTSE 100, which is less than 200 short of the all-time record. And you know, it's really strange.
It's been bobbling around this all-time record for a while, but really what counts is the sort of dividend reinvestment. So the index kind of doesn't do a great deal, but because it's such a high yielding market, over time it is a decent performer and was one of the standouts in 2022, not just the income aspect, but because you had traditional so-called value stocks, which were the place to be. I suppose you've got to remember that UK market only makes up about 4% of the world index. So if you're UK centric, you've been lucky.
I mean, I was amazed to see in The Guardian, a newspaper that I don't read, but I sometimes get free advice from it, as it were, that the FTSE has actually gone up 1% overall in 2022.
Yes, if you don't include dividends, if you have dividends back, it's more like 4.5%.
Yeah,
so again, nothing not to be sniffed at when everything else is down. Like UK gilts have lost like 25-30% during the year. So yeah, it's a godsend if you've got UK equities.
Now, Toby, bear or bull market, or is there such a thing as an in-between?
Well, we've had the bear market already, because markets, as you know, always forward-looking. And what last year's told you is that 2023 is going to be a reasonable recession. But that doesn't always translate into what's going on with markets now. So we've had the downside discounted, and we've probably got more potential losses in the first quarter, but this will likely mark the bottom of the market, and we should see quite a strong year. Again, it might take the rest of 2023 to get back to break even. So you're looking at 2 years effectively of the investments lying fallow, which is not great, especially when inflation's been kicking off.
But interesting. I mean, I can't remember such a short bear market if we're going to sort of look at it from the point of view where we are now compared with where we were, say, less than a year ago.
I mean, these if you talk about bear markets in stock market terms, usually like 20% losses. Had a very short spell in March 2020, for example. There's all kind of cycles of long and short bear markets, and I think one thing we've learned from last year is that if you try and use history as a guide to the future, it really fell flat in its face. For someone who's a history buff like me, it's been a painful lesson that you just got to take things as they are and not always try and model everything on the past, because sometimes it just doesn't work.
Is the world in recession in your view at the moment?
Well, it's moving to a two-pronged world. Certainly the West has become very stodgy, heavily bureaucratic, and gone back to this old mantra of high tax and low growth, which is very Spartan, but it really is putting us on the back foot versus China. So China's now opening up again, got their new year coming soon, and I think their stock market's really been shot out the blocks. I think this could be the year when emerging markets in Asia really do very well, partly because of weaker dollar, but also because they're moving on at their own pace, whereas we're really getting stuck in the past and bogged down. So yes, the West is going to be pretty turgid. Rest of the world might surprise us, I think.
What's the definition of a recession?
Officially, it's 2 quarters, like 2 lots of 3 months of back-to-back negative growth.
Yeah.
I think the Americans are trying to change the definition of recessions. We'll never be in it, but it is plain to see that with the consumer so battered, that economic growth is and will be stagnant for some time.
Yeah.
Until we can see the benefits of lower energy costs come through and lower inflation, then that's where it's going to be. But you can never equate stock markets with the economy necessarily. So it could mean that if you've got potentially flat or falling rates in the future, then equities could do quite well. It's just one of those perverse things.
It's quite interesting that sterling, where people were sort of predicting not so long ago it was going to reach parity, dollar and pound, sterling's recovered quite well. But is that because the dollar's weakened?
It did come pretty close. I think intraday or overnight it got to about 1.03 to the dollar. So looking back to sort of 1985 levels, when you had major interventions through the Plaza Accord, if you remember that. So yeah, it's a combination that because the dollar was the only game in town, was the only place to give interest rates, and now the likes of the UK are starting to catch up. So in relative terms, it's a bit of both. So yeah, I think if you get the UK stock market and the pound recovering together, then that's a pretty good sign overall. Weaker dollar is not necessarily a bad thing. It's good for emerging markets. Commodity investments do quite well.
Yeah,
so,
good for oil and energy. Good for oil and energy. Yeah. But
bad for us.
An interesting situation, because I can't remember a 12-month period where so much has happened so quickly. But there we are. Let's get on. Sorry, let's get on to Tesla, Twitter, and Musk. Once the richest man in the world.
Yeah, it's been fascinating. I'm not sure if this is just a kind of a pantomime performance or what, but the fact that Musk has revealed so many shenanigans at Twitter is quite disturbing. You kind of sensed it all along that there was some collusion between big tech and politics to suppress certain voices and to emphasize others. And this is done by using fake accounts that suddenly liked the person that big tech liked and wouldn't even give any airtime to those who weren't in favor. So effectively, you could be shouting into the wind and be a very well-known figure, but no one would see your post. So it's exposed a highly manipulative environment in tech world, and this has been shown on various documentaries on television before as well. So it's really just draining the swamp, as Donald Trump said. We're seeing what lurks below.
Because the thing is, he sort of entered the deal, discovered that he was paying a lot over the top, tried to get out of it, couldn't get out of it, and as obviously as you say, exposed a lot of the weaknesses in it. But it does seem a bit strange that you sort of commit that sort of money to a deal and then suddenly have second thoughts.
Yeah, he's paying the price. I mean, but once he looked under the bonnet, then he realized that all's not as it should be in terms of the number of accounts and how they're using algorithms to suppress certain news and enhance other news, which was politically biased. So people talk about the Russians interfering in elections, but I think the monster is closer to home.
But of course, it also had an effect on the shares, on the Tesla share price, and he owns the Tesla car company, doesn't he? In terms of the majority.
He's paying the price. I mean, you could say he's a white knight. I just don't know. It's kind of a pantomime aspect to it. You just don't know who the real deal is anymore. Best to be cynical.
Tesla's been very successful, though, hasn't it? As bearing in mind it hasn't been around that long. I see that they delivered 1 million units last year, which is pretty good going, I would have thought, for a car manufacturer. Yeah,
they've caught the trend. Everyone's trying to catch up with them as well. But like a lot of these cases, you have the network effect, where the first in and becomes the biggest, and it becomes hard to challenge. And there's other aspects of, as we discussed before, about electric cars and the infrastructure, and whether it's really a sustainable model. That's probably subject to another discussion. But
Yeah.
but for now, yeah, they're riding that trend pretty well.
Yeah. Now let's get back to that mini budget, shall we? I've never seen so many U-turns.
It's a pity, really, because I think it was discussed last time, the principles behind this idea of promoting growth and lower taxes is, very Thatcherite and works incredibly well. And now we're back to the same old world of conventional high taxes, low growth. And people laugh at the budget at the time, and there was a chaos and miscommunication element to it. But in principle, that's exactly what we needed. And it's just such a pity it was handled so poorly. And we're back to stagnation. So, yeah, if we go back in time, we just wish that Kwasi could have explained the principles of the Laffer curve and how lower taxes actually increase tax revenue. Obviously, there's a shortfall, but even now, the next 5 years can see massive issuance of gilts to the market, to fund the economy. So it could be worse. I mean, the UK is actually one of the better of the G7 countries when it comes to debt levels. Only Germany is better. I think we've again discussed this in the past.
Yeah,
and we're likely to see kind of a peak this year in debt to GDP of about 106%. And by 2025, that'll fall to about 101%. So it's relatively speaking, it's okay. That's what we can say.
Do you think that if he'd put that budget through via the Office of Budget Responsibility and had been, got an endorsement from them, would that have saved the situation?
I think ultimately you're dealing with factions in the UK government where you have the conventional, the civil service driven side, and really what he was proposing is quite revolutionary. If you think back to the Margaret Thatcher days, you had hundreds of economists writing in to say why her policies would fail, and of course they worked. So being different and unconventional is not popular, and even if he had got passed it by them, there'd still be the same response. It was really about convincing that the financial markets rather than the government bureaucracy, and that's where it failed, unfortunately.
But it didn't just affect the UK, did it? It was a worldwide sort of repercussion, as it were.
It was going on pretty much everywhere where you had interest rates and bond yields spiking up, and this really battered pension funds. So even in the case of the Bank of England, they were using these products designed by investment banks to enhance yield, which blew up in their face. This is part of the issue that was going on at the time. When you have bond prices falling so badly, it just triggers off all kinds of other unintended consequences. So it's partly the budget itself, but partly things going on in the States as well, which all collided all at once, as these things always do.
Which, of course, we saw in 2008.
Yeah, again, that's
dodgy mortgage products.
It's always investment banks always create products to seem to solve the issue of the day, and actually they're building up problems for later. Always liken it to when you have we're looking at a natural environment and using pesticides. You think it's all diluted, but actually things go up the food chain and concentrate again. Just like these financial products, they're toxic, and eventually they coalesce and draw together chaos. We'll see what the next one is.
I know what it is. I've got it lined up for you. Now, oil prices, they've come down, haven't they? They're off the 100.
Where we were a year ago. Same with the gas prices. I mean, gas had a much greater spike in the meantime. And so it kind of makes you think, if these wholesale prices have been and gone, effectively they're now negative over the year, why are consumers being so badly gouged? And this way, you got to look at the middleman and energy suppliers and wonder, but in the Anglo-Saxon models, are we very vulnerable to, being used by these companies, leaving the public absolutely, absolutely bereft of money? I mean, if you look at France, for example, I mean, I've got a little place in France, and my electricity bills haven't gone up at all. It's a government versus private sector thing, and there should be some happy medium. And I think the UK's gone too far the wrong way, unfortunately.
And of course, they've been charging on elements of the electricity that hasn't actually had to rely on gas for generation.
Yeah,
you know, they've just taken a view. Let's put a unit price in of X across the board, and you know, as you say, obviously not behaving themselves. I could think of perhaps slightly stronger language, but I better not do that.
Yeah, it's a murky world in this pricing, and you've got to think back when the oil price collapsed. All of these firms were buckled under as well. So it's just a never-ending sort of swing of extremes at the moment. It's always the consumer who seems to pay.
You got any views on UK energy subsidies?
I think that the idea of them at the time was correct, because most people were on their knees. I mean, if we can get the decline, if you get the energy price declines passed on, then there'll be less need for them. But this is all contributing to this greater gilt issuance in future and requirements for more debt. But sometimes you just there has to be intervention in extreme cases. So yeah, it had to be done.
Do you feel that inflation's going to peak this year?
Yeah, I mean, we should see a peak. We've got the energy side as one aspect to it, but another conundrum is that, particularly in the States, the idea of putting up interest rates is meant to keep inflation low.
Yeah.
And actually, for a major part of the economy, it's actually making it worse. This is because the mortgage rates have gone up, and landlords having to pass on those costs, higher taxes, higher utility bills. So the very act of putting up rates is actually putting up inflation, because about 40% of the American consumer price index is made up of rental-related costs. So these have been flat, these have been moribund for decades while US property boomed, and now it's come back to haunt them. So you might well find that the index changes its constituents or shape at some point, but for now it's becoming a very sticky issue, because although energy is down, these rental costs aren't going away. It has led into wage inflation as well, but luckily on the latest US payroll report, wage increases have been tempered, and that's why on Friday had a very good boost in American stock market. So all in all, I'm pretty positive that things have peaked. The question now is where it goes from here. Central banks are looking at 2% as their target in years to come, because that's their mandate. But I think that's a little naive. I think we're going to get back to where we were, basically, of interest rates and inflation being about the same, and it's a normalization more than an adverse swing.
Because a lot of people say the Bank of England missed the bus a little bit in terms of putting up the interest rates at the time that they should have. They just kept trying to delay it, and inevitably,
and that's the same. It's the same for all central banks. Because at the time inflation wasn't going up, they thought they'd get away with not putting up rates. But what they hadn't factored in is this huge burst in the money supply of plus 20%, because the government went straight to the public rather than going via banks. And this surge in money supplies created inflation, which necessitated rates to go up. So there's all kinds of things going wrong. But the danger now is that central banks like the Bank of England and Federal Reserve will say, "Oh, we look a bit stupid now. We're going to jack up rates too high and keep them too high for too long." So it's this never-ending cycle of reaction and overreaction.
It just goes on and on. Yeah. Now, UK's got quite a few pay disputes on at the present time: National Health Service, railways, border control, etc. I mean, when you go through a period of high inflation, we all take a bit of a hit. That's inevitable. And, from the past, if you start paying people inflation or above inflation pay rises, all you do is just perpetuate the spiral. What do you think?
That's right, because you're effectively, today's inflation rate is a reflection of the last year.
Yeah.
When really the pay deals need to reflect the inflation rate of the future. So I think the government's been right to be pretty firm on this. It's brutal for those who don't have a lot of assets, who are living day to day and month to month on their wage. But realistically, if they can have sensible wage deals, then that's good for everyone. I mean, I know it's very tough on the likes of nurses who have a really horrendous job, day in, day out, lack of sleep, and really not doing very pleasant work. It must be a kick in the teeth for them. I think some people are chancing their arm a bit. I mean, some of the border control people, realistically, they earn a good deal more than the military, for example, who had to step in and do their job. I mean, my son is a sniper in a specialist regiment, and he earns the same as a traffic warden, and yet he can't strike.
I know, this is incredible. I have to say that we came back from Spain through Heathrow. The military were there. The e-gates were working. We walked straight through. It was really good. And, everyone sort of said, oh, it works a lot better when you got the soldiers in charge.
I won't disagree with that. Yeah, and it's just a pity that they're always the last resort.
Yeah, I mean,
they've got to give up their holidays with that.
Yeah, absolutely. Yeah. And they do it. They don't grumble. They get on with life. But there we are.
Hopefully they don't start leaving, because the numbers already cracking points. And, in this environment, it's probably better to have a larger military than a smaller one.
Yeah, couldn't agree more. Yeah. Now, we said that we'd talk about financial services regulation in effect a little bit earlier on. And of course, we've got this cryptocurrency scandal at the present time, which was a Ponzi.
I mean, I think you've got to differentiate the sort of service providers of cryptos and the actual mechanism for Bitcoin and the blockchain itself. I mean, we've been through relentless frauds and collapses. I mean, the case of the most recent one, they were also big donors to the Democrats, so there's more kind of murkiness involved there. For these frontier type assets, there will always be the kind of the frontier risks that you get from bandits. But in many ways, cryptocurrencies are very anti-fragile. The more you hit them with this kind of negativity, the stronger they become. So I'm actually quite positive for their use in the future. Another aspect is that central banks want to develop their own as well. So maybe a case that in future the private sector versions become relegated while the government take over the scene, always as the apparent white knight and savior of the retail customer. But really, there's a good deal of sort of tyrannical control associated with currencies, and a crypto version is very powerful in the wrong hands, unfortunately.
Yeah. And sort of taking this a stage further, but getting away from crypto, a lot of these funeral plans that were unregulated are here today, that one of the major players has gone bust, and another one is in a very bad state. And of course, it's always a question that regulation follows innovation, doesn't it? And you just can't see how the FCA didn't sort of come in with a bit of regulation a little bit earlier for these things.
I think there's some move coming in for credit provision, like car loans and things. So hopefully that will all be encompassed. But ultimately, crooks and Ponzi's are always one step ahead of the curve, and regulators just inevitably react to problems that come up, rather than it's very difficult for them to forecast what's the next thing that's going wrong. Maybe if they could react a bit quicker to Ponzi schemes that other sectors of the community notice, that would help. But ultimately, it's then other bureaucracy, and they don't want to look bad. They don't want to take risks, and it's always better to react to something and crack down and tackle whatever, and try and stop it happening in the first place. It's just human nature.
Yeah, bit of a shame on people that thought they'd made their funeral provision sorted. Yes. But there we are. UK Christmas retail numbers, they weren't too bad, were they, all things considered?
Apparently it's a mixed bag. I'm not a sort of big retail analyst, but
no,
from what I believe, I think John Lewis and Tesco had a good run. M&S were a bit mixed, but I think the losers were Debenhams and Mothercare, I believe.
Yeah,
So
and of
yeah,
course Debenhams folded, shortly within that period. In any case, so
yeah,
yeah, it's an interesting situation because a lot of them were sort of saying, well, it's going to be a really worst Christmas ever from a retail point of view, and that wasn't the case. Presumably, people have just gone into debt on their credit cards to fund some of the presents and things like that.
yeah. We're always an optimistic bunch, and we'll. Yeah, I still can't work out who has all this money to go, go shopping these New Year's sales.
Yeah, that's right. And of course, Black Friday now as well.
Yeah.
So,
It's also great. Before and after.
Yeah, absolutely. It's just crazy, isn't it? It really is. Just to say that I saw a program on GB News the other night with Mr. Farage, who is still around, and actually, he does get down to the nitty gritty quite well. And he had on with him a gentleman who was a specialist in gold.
Okay.
And he'd been involved with it for many, many years, and he still feels that gold should be there in the background to support currencies. Obviously, a bit difficult now to do that.
Yeah, Farage does have a background in commodities. I saw him at a conference in Rome a few years back as well. He was a very good speaker. What I would say is that gold may well be a factor in currencies in the future, not for the West, but really for the central banks like China. Because there's a sort of a Pan-Asian bloc has sprung up, which involves like Saudi Arabia, China, Russia. It's kind of that the world is peeling away from the West.
Yeah,
and these are the countries that have been accumulating precious metals, that like Billio. They've been ditching US government bonds and buying gold. So there may be some element of it in future. All I would say is that it's very easy to be rose-tinted about the past because these gold standards work until they don't, and they always fall apart when wartime comes. So if you look back to pre-First World War, the gold standard stopped and a lot of debt was created. And then Churchill went straight back onto the gold standard in the mid-1920s. Then he had austerity and strikes, and it fell apart. Same with America in 1933. It's fine to have a stable currency in background because the gold supply only increases by 0.5% a year. So the money supply grows very gradually and is non-inflationary. However, there's times when you need more money, like a couple of years ago. Obviously, war times need more money. So it's very easy to be wildly optimistic. And if you're a big gold fan, you'll always say, bring back the gold standard. For me personally, as someone's been involved in precious metals for a long time, it definitely has its place, but it's just part of a jigsaw. It's not the be all and end all. Like cryptocurrencies, they have a place. One interesting thing to note, if you'll give me the time, is that the last time you had a big stock market and bond market sell-off in the last century was, you're looking back at 1931 and 1969. And 2 years later on each occasion, you had major currency resets. So this is when gold was unbundled from currencies. So you had a proper gold standard in 1930, had a gold exchange standard in the Nixon era, when the Vietnam War spending just rendered the whole thing useless. When it fell apart, obviously got a lot of inflation. But I think the central bank digital currencies may well kick in the next couple of years based on this idea of governments coming to the rescue with this. In the 1930s, it was the New Deal with Roosevelt. We're now talking about the Green New Deal. So a lot of this history is very much rhyming. And while all those things sound very euphemistic and happy and optimistic, I'm always wary of the control and the sort of government grab that comes with these
inevitably. And I mean, coming back to the domestic scene in the Channel Islands, I think we're not far short of a government grab on GST.
Yeah, it's just it's grim to see, and there's always a justification. We'll say, hospitals and education will suffer, and there's very little given to going back to the Thatcher era, of if you promote growth and cut taxes, wonderful things happen. And this is what happened, post-war Germany and Japan, and also to Guernsey as well 200 years ago. This ever-encroaching government and taxation is just a recipe for anemia. And what you really want to see is less government, but very few leaders will ever give this. So GST is a symptom, and like and it's a very simplistic example, but you get these black bin tags we have to pay for, and they're now jacking up the price on these. And what you see, as soon as you get GST or the VAT equivalent, lo and behold, the level keep going up. 20 to 20% as it is in the UK. So it's like a Trojan horse. You let one bit in, and the rest it'll take over. So I would like to see much more growth and less bureaucracy.
And we are agreed on the fact that they really want to look at the ways in which they can reduce spending. Robert McDowell, as you know, comes on from time to time, and he's convinced that the civil service is overbloated, and I suppose that's part of the point where you start to try and make savings. Trouble is with I was just going to say, trouble is with the Channel Islands, you get so much duplication. I mean, there'd be a lot to be said for Guernsey and Jersey to get very closely together and pool resources, in terms of bureaucracy and stuff like that.
There's justification for some big capital projects. And this is, again, going back 200 years, this is how Guernsey got itself out of a massive hole by creating its own currency without interest, the so-called Guernsey experiment. And we ended up with the breakwater, town markets, numerous projects repeated over and over again. So infrastructure is a key part of recovery and growth of the future. So some capital projects needed some kind of real vanity projects, which may or may not generate money in future. So there's a kind of a push-pull between them, where I know there's always governments seem to say, "Oh, this is going to be a terrible, outcome," but the budgets aren't too bad when they come out in the end. So I'm just sick of scaremongering from governments generally the last few years. If you just be given a bit more space to get on and do things by ourselves, then that would, like the American model of the old days, and I think we'd do a lot better, to be honest.
Looking at the Guernsey revolution of 200 years ago, then, were they reliant on local labour then, or did they have to import labour to carry out some of these projects? Well,
there was very high unemployment. This is after the Napoleonic War. There's also a big recession on in the UK, where they reintroduced the gold standard and corn laws. So the whole, everywhere was a mess, massively indebted, and the interest payments were, of Greek proportions today. So this idea of creating a new form of money without interest really set us off on a fantastic growth trajectory, which saw us, very well for the next century. So some radical thinking is required, but this isn't nowadays. Maybe it's because there's more and more people like English folk coming in like me. Things are getting more and more conservative and consensual. And the good old Guernsey folk, who are kind of buccaneers and risk takers of the past, maybe they've been diluted. And so it's radical approaches just don't curry any favor with regulators or government nowadays. It's all let's get a UK consultant to tell us what to do.
Yes, that's right. Yeah. And possibly getting UK labour over to do the job. And of course the money goes out the Guernsey economy, doesn't it? There we are. Anyway, that wasn't too gloomy a note to end on, was it?
I think I'm pretty positive for the year ahead, albeit this will probably be a tough quarter. But on the whole, as long as you get back to break even at the end of the year, that's the beginning of a new base. Move on. Next year will have to look after itself. One battle at a time, I think.
Very true. Many thanks, Toby. As ever, really enjoyed it. Hope we can do another one in April.
Yep. All still around.
to continue to view your prognostications.
Thanks.
All the
Appreciate it.
best. Thanks very much, Toby.
Cheers. Thanks.